Good day trader, my name is Vasco Smart FX. So welcome to my YouTube channel. So today's topic is the intraday strategy. So I have a lot of series on intraday strategy where I use gold as an example for all my intraday strategy. My intraday strategy is actually the same, but the videos I actually do again is that maybe I learn something new, then I'm going to come online again, then do something that I learned new. So for today now, we'll be going on intraday strategy. So I'll be making use of JBP USD. So I'm making use of JBP USD, and I will add little things to it. What I've been teaching before, I will add little things to it. So the what I've been teaching before is just the Q zone, the Q zone, the Asian high and the Asian low, and the pattern. That's all. That's what I'm teaching before, like for the intraday strategy. But now I learned new things. I'm going to add it to it. So it has been helping. It will give you more confidence and more probability of winning. Yeah. So for today's now, we'll be using three things, and the three things are okay. Let me put it down here. Okay, I have templates. Okay. Now the three things we'll be using today, they are called the weekly target, the daily open, and the Q zone. If you have been following me for so long, I don't need to explain what a Q zone is. My two Q zone I use. Um, I don't need to explain what a Q zone is. Now for the daily open is just you need to demarcate where the day started from. So you need to do that. Going down to your daily chart, just check, or you can look at your chart. You can see it's kind of visible. Check your daily open. So if you check your daily open, then that's it. So now for the daily open, there is only two rules. The first rule is that when you are expecting bullishness from the daily chart, okay, your daily chart now you analyze it, you are expecting bullishness, you are expecting market to go bull, like longs, you are expecting long market in that day. Market, you must be a buyer at the lower of the day open. So which means that, okay, let me try and make a diagram here. This, let me say this is a day now. You want to be a buyer in that day. So when that day opens, market must retrace down first before going buy. So what this law says is that if you want to be a buyer, you must be a buyer. You must be a buyer in this range. So this range now is your buying range. This is where the market open. This is the open of the market. So if you want to be a buyer, you must be a buyer inside this range. So make sure that it must be lower. Your buying techniques must come in the lower part of the opening price. Do you understand? So the vice versa for the buy, also for the sell. If you are expecting a sell market, like let me okay 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 let's say we are expecting a sell market for the day. So when the market opens, then you need to expect a retreat back into the higher than the opening price. Then you can now sell. So you cannot sell. So which means that if you want to be a seller, you must sell above the opening price. So that's what the law says. That's just for that. It's a very simple law, right? So for the weekly target, in every chart that you want to trade in that week, you must have a target. And if you have a target, you must understand that your target can only be met at during the Monday, Tuesday, Wednesday. Those are the 3 days that your target can be met. Thursday and Friday is actually a probability trade. It's a very low reward trade. It's a very high risk, low reward. Don't get me wrong. It is very high risk trade. Most time on Thursdays and Friday, there's always a change in movement. If market is buying, 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 then when you get to Thursday and Friday, there will be a change in movement. It's either it sells on Thursday, then sell again on Friday, or there will surely be a change. So Monday, Tuesday, Wednesday, they are the ones that will follow your weekly target. So which means that you need to have a weekly target. Okay, where do you want the week to go? Do you want the week to be a buyer? To do what? Being a buyer? Okay, to take out a liquidity or to close down a fair value gap. So those are the three things we put together. Okay, let's check this on GBP trade. Okay, I have this trade here. Okay, I think it's these days. Okay, so in these days now, you can see the opening price. Okay, okay, let me try and go down. This was on October 23. So let's go to the daily. Okay, okay. October. Okay, I'm coming. Okay, let me try and check the date back. This 10 October. Okay, so on 10th of October, I'm actually expecting a bullish market. So on the 10th of October, this is here. I'm expecting a bullish market because I was expecting this liquidity to be taken out. Let me draw out the liquidity. I saw this before end. I was expecting this liquidity to be taken out. Okay, let's draw out the open of this trade. So let's draw out the open. The open comes at 12237. 12237, 12237, 122373. Okay, okay, that's the opening of the, let's see, visibility. Okay, so that's the opening. So let's go down to 5 minutes. Okay, okay, so this is the opening price that we saw. So let's give it a color. Okay, this is the opening price we saw. So on this days here, the first thing, the opening price, I was expecting a bullish market. I was expecting this liquidity here to be raided off, as I saw in the. So I was expecting this market to take out this liquidity, and market opens at this level. So I was expecting a bullish market. So the second thing is the kill zone. So I know my weekly targets, I know my daily open, and the second thing is the kill zone. On the kill zone, I said the patterns I first draw in my series that I've dropped before was this. I said if you see something like this, market goes on the then. So I said this, you need to look for fair value gap or order block. This is what I draw right for the patterns I'm using on gold. So I added another pattern recently, which is called the mitigation aspect. So in case I'm on a bullish movement, then I'll be looking for something like this. Then I want market to come down to this and be a buyer. So can you see something here? Here there is what they call a failure swing. So market was unable to take out the liquidity on that failure swing. Then I'm expecting this place here to be my mitigation block. So that was I was expecting in the market. So now on here now, okay, I hope you can see this. So this is the patterns that I'll be making use of now. This is the added pattern I added to it. So this is the added pattern. So let's check this trade out. I'll be going down on 3 minutes right now. So 3 minutes. Okay. So this is it here. So on the Q zone, so I said I'm not going to explain the Q zone anymore because we have the Q zone here. We all know what the Q zone is. So I'm on the London Q zone right now. And okay, now don't forget what this line is. The line is just the opening price. So we have our target here. So now on here now, I know what I'm looking for, so I need to work according to what I'm looking for. So on that Q zones, I saw market breaks down. I saw market breaks down here. So these are the Asian low. The Asian low has been taken out. Then here I saw market break low. I saw market break low. So okay now. So we have this low here broke. We have this low here broke. Let me kind of zoom in. So you can see it here. So here now if you look at this patterns that we have here, you can see something like market goes down, then goes, then the market breaks down this high. The market breaks down this high. You can see that there's a kind of patterns here, which means like a failure swing. Market was unable to come down. See, this one goes, then this other one here, market was unable to come down to this extent. So at this point here, we are having what our mitigation block. So this is what we holding up our mitigation block. So you can just put it as this and then just say our mitigation block. So this is our mitigation block here. Can no don't be confused here. You can see this, what happens here is just market goes down, then it comes, then it goes, then when it comes here, it goes here, then it comes back again, then it goes. Then this here is what I call the mitigation. The market goes up. It all happened inside the Q zone. I don't ask you to find it anywhere else. And you need to know your daily and your weekly target. So you can see this mitigation. This is what happens in this whole scenario that is here. Whole scenarios, this is what happens. So from here now, I put my entry. I put my entry because that day I was kind of nervous. So I just look for 1 to 2, put my stop loss and just look for 1 to 2. Yeah. So just need to have like kind of profit. So 1 to 2 is okay since you just want to be a profitable trader. So 1 to 2, 1 to 3, and if you want to put it at, but to me, I would just say 1 to 2 is okay. So 1 to 2 is okay to me now. So you can just see this 1 to 2. So that's so let me show you on my Telegram channel where I took the trade live. So this is my Telegram channel. You can see JPUSD buy limits. You can see the trade I called. Hope you can see the date. Yeah, so this is just the trade here I took. JPUSD was not that cleared. So this was the trade I took. JPUSD I took that on October 10. Yeah. So you can see when the trade hits my take profit with just little moves. So that's it. So that's for the strategy just added, and the reason because it is below the opening price of the day, and I want to be a bull. Like I want to go on longs. I'm looking for a long trade because my liquidity of the weekly range is above. So I look for, assuming I hire um the the weekly range. The weekly range is here. This buy stop here. You can see all market goes long into that range. You can see the how market goes long into that range. So that's the weekly range. So that's why I said you need to understand your weekly targets. When you understand your weekly targets and what time of the day, Tuesday. So Tuesday is part of the day you can search for your weekly targets. And the next thing your daily open for that day. You need bull. You need to become a buyer. You want to be a buyer of that day. Then you draw your opening price. Then you let market goes down into below that opening price. Then you wait for the Q zone time. Then the Q zone time, you either search for the OTE patterns or the mitigation or the fair value gap inside the Q zone. So this I found here is a key. So I hope you like it. Share, like and subscribe.